Well, with stocks sitting in negative territory for the year and only 10 trading days left in 2018, it's not looking good. Take a look at the market tails from the crypt. The S&P 500 has only been negative 3 out of the past 15 years. But our next guest says not all hope is lost. A 10% rally is still on the table before year end. Let's bring in Fundstrat's Tom Lee. Tom, you're really bullish.
But now sitting next to Carter, it's warming down.
Shake hands, guys. Hug it out.
Right.
Yeah.
So in what form will this 10% rally look like? What sectors will take us there?
Well, it's, obviously we're working with a really short time frame.
Yes.
But we know that markets have been moving very quickly in the last couple of months, right? In 5 days, we've lost 200 points. I think, to me, anything that happens between now and year end is a lot more about positioning than macro developments. Like AAII sentiment, bulls minus bears, it's the worst since February 12th, 2016, like days before the market bottomed. And from all of our conversations with clients, our clients aren't worried about a bull rally and missing out a bull rally. They're worried about how much of a drawdown they're facing. So we think most of our clients have gone neutral or even into cash. I think that they've made a determination this is late cycle. So I think that there's a bullish scenario, which is everyone's off sides. And if there's any positive elements, Dan, you mentioned a couple, I think these are catalysts, and 10 days could, see a significant reversal.
So is it going to be the tech sector? Is it going to be financials? I mean, what's the quality of that 10% rally?
This is going to be tougher, but I think the market is gravitating towards quality names. So it's more like Walt Disney over Netflix. So more Cisco over FANG. And I think maybe that's how people want to be positioned anyways, but I think that's the stuff they're willing to sort of buy up.
I'm curious, Tom, all your life, have you been called an optimist by nature? Because you're sounding, given the short time frame for your S&P 500 call, and you're also standing pat in terms of Bitcoin, saying the market's got it wrong on Bitcoin. Bitcoin should actually be valued higher, and the market's, there's a disconnect there. I mean, you're really sticking by your guns here.
Well, we're contrarian at the extremes. And actually, as markets make more extreme moves, we tend to look more contrarian. Mm-hmm. I don't necessarily think 2019 is a great year for equities, but do I think people should be bearish and we should be talking about, a recession? I think it's too early to make that judgment, and I see positioning, so that makes us bullish. On crypto, again, I think the story there is just about adoption on wallets, and that's grown this year. And to us, that's determined fair value for the last 8 years. 93% of the move of Bitcoin's just been explained by active addresses and activity per user. This is the only year where they've really diverged. So I'm not saying the market's wrong. I'm just saying the thing that has driven and explained crypto for the last 8 years hasn't explained the market this year.
Okay. Here's another contrarian call. General Electric.
Yes.
So bad it's good.
Yes, we actually just published a piece, so we looked at 120 years of price history for GE. It's back, its ratio to the Dow is back to 1920. And a lot of bad news has been priced in, and I think one of the most significant developments this week is actually Steve Tusa's upgrade, not because he's moved the market, but it's just evidence that a lot of bad news is priced in. And it's like the least institutionally owned, its price to sales is now a 75% discount to the S&P. It's the least like among the industrials. So to us, the risk reward is there. But it's an ugly chart. Our TA, Rob Slimer, says he doesn't see any evidence of it. And then Carter's going to get me more depressed.
No, it is an ugly chart. But let's hold that aside. At the lows in 2009, there was a large contingent of players who believed that GE was a zero, right? That it was upside down in terms of its leverage, and that if not for the bailout, it would have been a zero. Is it any better now? I'm asking because I don't know. I don't do that for a living. But what is the situation?
So there's a lot written. In fact, the Journal had an article today about GE. Number one, the CDS is like 240 wide now. When GE was last $7, it was 1,000 wide. So credit saying, hey, I'm a little more comfortable. There's a lot of estimates that some of their flagship businesses, like their turbines, are worth $90 billion. The stock's at $56 billion. So in a way, and they had change agents, right? New management. So maybe little things have to go right, and then good things happen with GE.
Well, I hope you're right, Tom, in terms of the markets. Happy holidays to you. Tom has been really enjoying the holiday. He's been in full holiday spirits of late.
Holiday shirt?
Yeah, see, there you have the...
Oh, look at him. Wait, is that a Photoshop?
No, that's real, right, Tom?
Come on.
It's real.
That's real.
Wow, you've got some moves
He's
there,
got
Tom.
really good form.
Nice
Look, his
pins.
toe is pointed. I mean, he's really... Excellent. It's an excellent photo.
He looks disturbing.
Tom,
It's not
thank you.
excellent.
Tom
That's
Lee
one word.
of Fundstrat. I think it's excellent.
No, you don't, Mel. I see the look.
You see the setup
think
for a
that-
10% snapback.
I think the most important thing is it's not what happens between now and the end of the year. It really is the setup. Like last year, we were ripping after those tax cuts in the end of December into the new year, and it kept on going. And what did it do? It set up for a 12% straight line down. So we escalated it up, elevated it down. That's what makes me nervous about any shenanigans late year, and it's not something that I would want to kind of get really involved in one way or another.